Hello, everyone. In this session, we're going to talk about the pension, and we try to discuss in detail about the workplace pension and how does it work. So there are different pension provider we have. So we'll talk about the Nest today. This is one of the government pension scheme, and most of the company they use Nest as a workplace pension provider. So I'll try to explain a little bit detail how the pension work, and of course, like that might be helpful for your understanding. So let's start with the first how we complete our duties and when we have to complete our duties as a company. For example, if you're a limited company and you will receive a letter from pension regulator. So unless you receive the letter from the pension regulator, you don't have to do anything. So you can wait once you employ some people on your payroll and you will receive a letter from the pension regulator. And this letter will tell you to complete the declaration. And on the letter, they will give you your company PAYE reference number, and also they will give you one letter code. This too is very important because without this too, you will not be able to log in or make account or complete the declaration for your company. So it's very important. When you have the letter, you have to keep this letter. The letter normally have a deadline for 5 months. It could be more or less. It depends on your company different situation, but normally they give you 5 months to complete the declaration. So first, what you do once you receive that letter, you complete the declaration. There's something called a staging date. So you have to select a staging date and you have to start complete the declaration. Now, this is only happen when your first time employee, first time put someone on the payroll, and only you have to do when you have at least one person who will work for the payroll. And let's have a look what is the declaration said. So if we go here with the pension regulator, so they'll ask you three questions. The first question will ask you, employing a staff for the first time. So are you employing any staff first time on the payroll? So they said, answer yes if you employ at least one person now, or you are thinking of employing someone, or current member of the staff does not earn enough to pay tax and national insurance. So the simple is this: if you have anyone on the payroll who is working for the company, then you have to say yes. This is your first answer. Age. So it says any of the people you employ aged between 22 to state pension. So obviously, if the answer is yes, you will say yes. And the next, obviously, we are talking about here the auto enrollment, when as the employer, as a company, I have a responsibility to put them on the payroll by law. So we're talking about that. Now here we can see they said, is that employee age 22 or more? If the answer is yes, and if this person earning 192 pound a week and 833 pound a month or 10,000 a year. So if any of this answer is yes, then this three question is completed and they will tell you yes. Then you have to put them on your pension scheme. So three question one, is this pension, if the person is 22 years or more old, and if that person is earning more than 92 pound a week, and if the answer is yes, then as a company, as employer, it is your responsibility to put them or enroll them on the pension scheme. Now you can choose the pension scheme you like. There is Aviva, Nest pension, there's a different pension. You can choose the one you like, but the most common one and the government one is the Nest. Now they said, I am or will be an employer who has to provide a pension scheme. So you have selected the following option, and you currently will at least one person earning more than 10,000. 22 is the age. So view your duties based on information you provided. An employer staff must be put in the pension scheme. Your automatic enrollment duties start when you employ your first member of the staff. That means your responsibility started the day you employ someone. Now it is very important, like it is your legal duty. You have to do it. It's automatic enrollment is your legal duty, and if you don't act, it could be fined. So if you don't put them on the pension on time or right time, you could be fine. Now, let's say if you understand, like, okay, I have an employee, the age is more 22, and he or she is earning more than £192 a week. So what else I need to do? Now, you have to do a few things. You have to do actually 4 things. The first thing, you have to choose a pension scheme. So you need to click here. So to see which pension scheme, find the pension scheme yourself. So you can find Nest, Aviva, whatever you like. Step number 1, choose a pension scheme. You have to register your company with that pension scheme. So you go to Nest, you make a login. They'll give you a login and password. So you create an account with them. Then after that, work out who to put on a pension scheme. So here you need to find it out how many employees we have. They are eligible for the pension scheme. The next thing we have here, write to the staff. So staff will be surprised, and obviously if you start deducting the pension from his salary, then he or she will maybe surprised. For that reason, you have to write to that employee within 6 weeks after duty start date. So you need to write a letter or email them, like because of you are more than 22 years old, or you are earning more than £192 a week, so we are going to put you in the pension scheme. And obviously, like, after that, he or she will understand, like, this is the reason, because it is a legal duty. There is no way you can skip it. Now, one more thing I want to tell, that is, like, it is a legal duty for the employer, for the company. But as an employee, if I don't like to be in a pension, I can always opt out. I can always opt out. I said I don't like to be in a pension, I can always opt out. But as a company, I cannot decide I want to put you on the pension or not. So if someone is not 22 or earn less than 192, if the person come to me, I like to be in a pension, then I can put him in a pension, or I can have a conversation. But if someone fulfill the statutory requirement, then I have to put them on a pension, and it is their choice. They want to be in a pension or not. It is not still mandatory for them. But as a company, it is mandatory for you. Then we have to complete one declaration. The declaration we said that later we receive from HMRC, and obviously that later will give us the POI reference number and the letter code. We need this one to log in to the pension regulator and complete the declaration. When you complete the declaration, you have to tell, like, how many employees you have on the staging date, what will be your next redeclaration date, what is the director, the company address, this and that you have to complete. It will take maybe 15-20 minutes to complete, and you have to do it every 3 years. Every 3 years, you're going to receive a letter from the pension regulator to complete your redeclaration. So this is a basic story. As a company, you have to do it. The next step with the Nest, once you have a login with the Nest, you will be able to look at how much is the contribution for your employees, and you can upload there. Now, we already know that for this year 2022, obviously the employee contribution is 5% and employer is 3%. So minimum contribution will be 8% to the pension pot for each employee. Now, it is also possible the company can pay some more if the company want, but it is not by law. If they pay 3%, that will be fulfill their statutory requirement. Also, they can get the tax relief. Depends what sort of the pension scheme they are using and what is the conditions are involved there. Now let's talk about the qualifying earnings. So the pension will be calculated if based on the qualified earnings. So how we'll work out that? So let's look at that. Now, for example, if we look at that Nest pension page, so you can see here, they said, how do I calculate the contribution using the qualifying earning? Now, what is qualifying earning? Qualifying earning is all about, there is a threshold. Up to that amount, we don't have to pay any pension. As I said, 192 per week. That means obviously it represent some sort of like requirement for the enrollment, for the auto enrollment. But for the qualifying earning means it is like I have to earn minimum amount so that I can contribute something on the pension, and that is £120 a week. So that means if I earn less than £120 a week, so there will be no contribution that I have to pay to the pension. Remember, if I don't contribute anything, then the company also, they don't have to contribute anything for me. So when I contribute, the company have to contribute as well. Now, for example, you can see here, they said for the government for the year 2022 and 23, we can see it is 6240 and 50,000 to 70. So the lower threshold, 6240. So if I earn 6240 in a year, I don't have to pay any pension. and up to 50,270. So if I earn more than 50,270, I will stop 50,270 because this is my maximum threshold. So I'm not gonna take all, even if I earn 100,000, I will say 100,000, not 100,000, I will say 50,270 minus 6240. So always stop here, 50,270. That's my maximum threshold for the pension contribution. Now, the next thing is like, how does it work out? For example, let's say if a worker earn 20,000 a year, so their qualifying earning will be 13,760. How did you find it out? So 20,000 minus 6240. This is the exemption amount. So if I minus that, I will have 13,760. So up to 13,760, I don't have to pay really any pension. Now, obviously, like if it is fortnightly, then it is 240. If it is 4 weekly, 480, and monthly, 520. And it is the upper threshold. So you need to understand how does it work. And the difference, we call it pensionable earning. So pensionable earning means, for example, if someone earn £200 a week, so you have to minus 120 from there. So actually, the pensionable earning will be £80. So the pension will be calculated, that is the 5% on this amount, £80, not 200, because 120 will be the lower threshold that we have to minus from the gross earning. So this is a very important to understand. All right. Now, the next thing you have to understand, what sort of income is included on the gross pay for the pension purpose. You can see when you are calculating a worker qualifying earning for a pay period, it could be weekly, fortnightly, or maybe monthly. It includes the following calculation. We have a salary, overtime, bonus, commission, statutory sick pay, holiday, everything. So it will be included all. So when you calculate the qualifying earning, you have to make sure you add all of this. So don't make anything exempted. Everything is eligible for the pensionable earning. Now, this is the first thing. The next thing we have here, lower level of qualifying earning. If a worker is paid weekly, for example, 200, you will need to subtract the threshold 120 from the total pay 200. So that is pensionable pay is 80. So you'll need to calculate the contribution based on that amount. Now, you might thinking like, for example, if you have a lot of employees, let's say you have 5,000 employees, how are we going to do that? All you have to do, you have to set up this information on your payroll, and it will be calculated the report automatically. I'll show you that as well. And the upper level of qualifying earning, this is all about like if your earning is more than the 50,270, then you have to stop on the upper limits. For example, if someone earning is, it says £2,000, but we know the maximum threshold is 967. So 967 minus 120, that give you the 847. This is the maximum pensionable earning that you have to calculate the pension. So you cannot take everything because there is a upper and lower limit. Only up to that limit you can calculate the pension. So the minimum contribution for both employee and employer is 8%. So that means employer, the company have to pay at least 3%, and the employer will pay 5%. The employee, the staff will pay 5%, and the company will pay 3%. So that's all. And also when you have a next login, once you log in, there will be like managed contribution. So if you have a less employee, for example, if you have only 5 or 10 employee, you can do manually. So you can calculate the pensionable earning, you can calculate the pension, or you can get the report from the payroll, and you can just do it manually. If you have a more employees, for example, if you have 100 employees or 1,000 employees, you can upload the file. That is a Excel format, you will get it, and you can complete the Excel file, and you can just upload this. It will be absolutely fine. And also, like if you have like in different month or different week, if the income is going up and down, because every month or every week the earning is not same, you can always choose. So you can choose insufficient earning for this period, there will be no contribution for that. So it is not very difficult, but you need to know a little bit the Excel, how is it to work out, especially like when you have to report the pension report and the period summary, you have to make it together by using the VLOOKUP, and it will be very much quicker if you have a lot of employee to do. Also, if you have a lot of employee to enroll at the same time, you can also upload the file. Rather than writing the name and national insurance one by one, you can actually do that by uploading the file. Normally, once you enroll employee on the pension, within 1 or 2 weeks, they receive a welcome pack from the Nest, and that explain everything how the pension work, how they can log into their account, and they can see how much is the pension is there. But if they don't receive it, if the employee said like, oh, I did not receive anything from the Nest, so they can create a login. So all they need their national insurance and their full name, date of birth. So they need this information, and they can create the account, and actually they can see everything inside. So if they like to opt out, they can opt out as well. All right, so this is, we have information, and now let's look at on the payroll. So one more information I want to show you, how it is very important. So let me show you. On the payroll, you have to make sure like you set up the pension properly. So for example, if I am showing the Irish payroll, and obviously like if you have a different payroll software, more or less everything, every software have a pension settings, so you can always set up the way it is suitable for you. So I have choose, for example, pension gross. Now, if I choose the pension gross for all the employee, you can choose Nest. You can make any name you like actually, so you can make the name from here, whatever you like. Now, the pension earnings. So for example, if this two box you can see, if I take a say payment are taxed, payment are subject to NI, but if I don't click that, so it will be payment are tax free and the payment are NI free. So remember that pension deduction is tax and NI free. So you have to make sure you select that. Otherwise, how much the person is earning, it will be taxed on the pension as well. So for example, if the person earning 1,000 and if the pension is £50, so actually 1,000 minus 50, that is 950. So he or she will be liable to pay the tax on national insurance on 950, not 1,000. But there are a few more things you have to know. For example, is it like tax relief going to be claimed or not? And are you using the qualifying earning? There's a few things you need to know before you actually set up that. But you have to be, remember, this is set up properly. Otherwise, the wrong pension will be calculated for the employee. And obviously, it could be end up with the wrong amount for the employee and for yourself. And you have to click here, qualifying earning. If you select the qualifying earning, what will happen? The report will be generated based on the qualifying earning. And also, like, you can choose the auto enrollment. Most of the software now, they have an option for auto enrollment. Auto enrollment means like when the employee age reach 22 or more, and if they are more than 192, the software automatically enroll them into the pension. But of course, if you don't want them to enroll, you can always remove it manually, or you can select this employee exclude from the auto enrollment. You can do that manually, but if you choose auto enrollment, every time the software will enroll them automatically in the payroll system. And on top of that, you have to make sure like the rate is selected properly. So employee rate 5%, employer 3%. So you have to make sure the rate is properly selected. And once you have all of this, you will be able to make the report. For example, if I like to see a report for my pension, I can always click here, the report. And if you see the customs report, the bottom will have a pension. So if any employee on the pension, you will be able to look at the pension report, and it will show you how much is the pensionable earning. So you have to find it out, your employee gross income as well. So you can get it from the period summary and from the pensionable earning. So if someone is not earning enough for this period, you can say insufficient earning or absent. You can always choose that. The next pension have option for that. So that's how you can basically complete your pension. And this is more or less the basic information you need to know about the pension, but you can read more to understand more. And obviously, if you're thinking like if you are an employer or if you're planning to work like for your for the payroll, so payroll and pension is kind of very much interrelated. Because if someone work on the payroll, the company or the employer also expecting he knows how to work on the pension as well. So if you're thinking like you are planning to work on the payroll side, at the same time, you have to know the pension as well, how does it work. So I hope this information is helpful for you to understand the basic for your pension, and feel free to email me if you have a more question or anything you want to ask me. Thank you very much for watching.